Have you ever wondered why gold is so valuable during times of crisis? It's a question as old as civilization itself. From the ancient Egyptians to the modern-day investor, gold has always been seen as a beacon of stability in a stormy sea of economic uncertainty. When the going gets tough, the tough get gold? Throughout history, gold has been a go-to for trade and bartering when traditional forms of currency have faltered. Think about it. If paper money becomes worthless, what's a safer bet than a chunk of shiny, precious metal that's been valued since time immemorial? It's not just about its glittering allure, but about the confidence it inspires. Gold's appeal isn't just historical, it's psychological. It's a tangible asset, a physical manifestation of wealth that you can hold in your hand. And that's a comfort to many, especially during trying times. So let's delve into the history and find out why gold shines brightest in the darkest times. Let's journey back to the 1930s, to the era of the Great Depression. Imagine a time when the world's economies were in free fall, unemployment was skyrocketing, and banks were collapsing. This was the Great Depression, a period of severe economic downturn that left no corner of the globe untouched. But amidst this financial chaos, one thing stood firm: the value of gold. As economies crumbled, currencies lost their value. Paper money was suddenly just that, paper. But gold, with its inherent value, became the lifeboat in this economic storm. Investors and common folks alike started hoarding it, using it as a hedge against the rampant inflation and economic instability. But why gold? Well, gold has always been seen as a store of value, a safe haven in times of crisis. Unlike paper money or other assets, gold cannot be printed or produced at will. Its supply is limited, and it takes effort to mine. This scarcity, coupled with its universal acceptance, gives gold its enduring value. During the Great Depression, many countries, including the United States, abandoned the gold standard, effectively severing the link between their currencies and gold. This move was designed to stimulate economies by allowing for more flexible monetary policies. But ironically, it only increased the demand for gold. People understood that while paper money could be printed endlessly, thus losing value, gold remained finite and dependable. In the United States, the government even went as far as to confiscate privately held gold in 1933, offering paper dollars in exchange. This move was met with resistance, further highlighting the trust people placed in gold over paper money. So while the world was grappling with the harsh realities of the Great Depression, gold stood as an unshakable pillar, a beacon of stability in a sea of economic chaos. It offered a shield against inflation, a safeguard against economic instability, and a lifeline for those in financial distress. And so, gold proved its worth during this dark time, but this was just the beginning. A fast forward to the 1940s, a world at war. The global stage was set ablaze by the fires of World War II, a conflict that brought nations to their knees, economies to the brink, and humanity to a standstill. Amidst the smoke, rubble, and uncertainty, one constant remained true: the value of gold. During this time, gold was not just a symbol of wealth or a means of adornment. It was a lifeline. It was a means of survival. It was the backbone of economies and the fuel for war efforts. Countries around the globe turned to their gold reserves, not just as a safety net, but as a crucial resource to keep their nations afloat. Let's take a closer look. The Allies, for instance, used gold to pay for essential war supplies. The United States, with its vast gold reserves, became the world's primary supplier of weapons and machinery. Meanwhile, European nations transferred their gold reserves across the Atlantic for safekeeping, leveraging it to secure loans and buy critical supplies from the US and other countries. On the other side of the coin, the Axis powers also recognized the value of gold. Germany, in particular, used confiscated gold to bolster its war chest, strengthening its economy and maintaining its war machine. But it wasn't just about funding the war. Gold also played a vital role in maintaining economic stability during these turbulent times. As currencies fluctuated wildly and inflation loomed large, gold remained steady, its value unwavering. It provided a sense of security and stability amidst the chaos, a beacon of certainty in a world shrouded in doubt. The story of World War II is a tale of conflict, of devastation, and of human resilience, but it's also a story about gold. A story that underscores the enduring value of this precious metal, its role as a safe haven in times of crisis, and its ability to keep economies running even when the world seems to be falling apart. In times of war, gold was not just a precious metal, but a lifeline. Next stop, the 1970s oil crisis. Brace yourselves, folks, as we tumble down the rabbit hole of economic history to a time when bell-bottoms were all the rage and disco was king. But beyond the groovy tunes and funky fashion, the 1970s were marked by a seismic event that sent shockwaves through the global economy, the oil crisis. Here's the gist. In the 70s, the Organization of Arab Petroleum Exporting Countries, or OAPEC, proclaimed an oil embargo in response to the Yom Kippur War. This embargo led to a quadrupling of oil prices virtually overnight, causing a nasty bout of inflation worldwide and sending economies into a tailspin. Now, let's turn our attention to our shiny friend gold. During this period, the United States was still operating under the Bretton Woods system, where the value of the dollar was tied to gold. But as the oil crisis unfolded, the U.S. found itself in a pickle. With inflation rising and the economy struggling, the U.S. needed to print more money to stimulate growth. However, the gold standard was like a straitjacket, limiting the amount of money they could print to the amount of gold they had in reserves. So, what did the U.S. do? Well, in 1971, President Nixon said enough is enough and took the U.S. off the gold standard, allowing the Federal Reserve to print as much money as it needed. This move, known as the Nixon shock, led to a significant increase in the money supply and, consequently, inflation. And what about gold? Well, with the dollar no longer tied to gold, the price of the shiny metal was free to soar, and soar it did. From around $35 an ounce in the early 70s, gold skyrocketed to over $800 an ounce by the end of the decade. Gold once again proved its mettle, serving as a beacon of stability in an unstable economic landscape. Now let's turn our attention to the 2008 financial crisis. This was a seismic event, a financial earthquake that shook the very foundations of global economies. The crisis was triggered by the collapse of Lehman Brothers, one of the oldest banks in the United States. A housing market crash, rampant subprime mortgages, and risky financial derivatives created a perfect storm. As the crisis unfolded, stock markets around the globe plummeted. The Dow Jones Industrial Average, a key indicator of the health of the U.S. economy, nosedived, losing more than half of its value. The domino effect was felt worldwide, with economies from Asia to Europe buckling under the strain. Jobs were lost, businesses folded, and a recession of a magnitude not seen since the Great Depression gripped the world. And amidst this economic turbulence, there was gold. As the storm raged, investors sought refuge in this precious metal. Why? Because gold has historically been a safe haven during times of crisis. As the value of traditional assets like stocks and bonds fell, gold began to shine brighter. In the 2 years following the crisis, gold prices soared from around $600 an ounce to nearly $1,900. That's a threefold increase. Investors, who had previously overlooked gold, began to see its true value. It wasn't just a shiny metal anymore. It was a lifeline, a beacon of stability in a world turned upside down. The lesson here is clear. In times of economic uncertainty, gold has proven its mettle. It has shown itself to be resilient, a shield against the volatility of traditional markets. It's not just a commodity, it's an insurance policy, a hedge against economic turmoil. So, while the 2008 financial crisis was a dark time, for gold, it was a period of resurgence. It reminded the world of its enduring value, its ability to stand firm when all else is in flux. In the face of the worst economic disaster since the Great Depression, gold stood firm. And finally, we arrive at the present, the COVID-19 pandemic. In the early months of 2020, the world was hit by a new kind of crisis, a health crisis that quickly morphed into an economic crisis. The COVID-19 pandemic sent shockwaves through global economies, causing stock markets to plummet, businesses to shutter, and unemployment rates to skyrocket. It was a time of great uncertainty, a time when traditional investments seemed more like a gamble than a safety net. But in the midst of this chaos, one asset stood tall and unyielding, and that was gold. As the pandemic deepened and economies teetered, gold prices surged. In August of 2020, gold hit a record high, trading at over $2,000 per ounce for the first time ever. Why? Well, it's simple. In times of crisis, investors seek out safe havens, and gold has historically been the go-to safe haven asset. It's a tangible asset that doesn't rely on an issuer's promise to pay, making it less vulnerable to the economic volatility that can shake other investments to their core. But it wasn't just the safety aspect that drove up gold prices. The pandemic also brought about unprecedented levels of government stimulus, which led to fears of inflation. Gold is often seen as a hedge against inflation, so as these fears grew, so did demand for gold. However, it's important to note that while gold performed well during the pandemic, it wasn't immune to the initial shock. When the pandemic first hit, gold prices did dip as investors sold off assets to cover losses elsewhere. But this dip was short-lived, and gold quickly rebounded as the reality of the pandemic set in. So there you have it. The COVID-19 pandemic was a test of gold's resilience, and it passed with flying colors. Amidst economic uncertainty, record unemployment, and fears of inflation, gold proved once again why it's considered the ultimate safe haven asset. Even in the face of a global pandemic, gold's value remains unshakable. So, what have we learned from our journey through time? We've traveled through epochs of turmoil and upheaval, chronicling the performance of a timeless asset, gold. Let's take a moment to reflect on the golden threads we've traced in our narrative. We started with the Great Depression, a time of economic despair. Yet, amidst the financial rubble, gold emerged as a beacon of stability. It served as a lifeline for many, a safe harbor in the storm. We then moved to the throes of World War II. As nations were locked in a deadly dance, gold took center stage. It became a pivotal player on the global stage, a currency that transcended borders and political strife. The 1970s oil crisis was our next port of call, a time of soaring fuel prices and economic uncertainty, yet gold held its ground. It shone through the gloom, defying the odds to maintain its value and even thrive amidst the chaos. Then came the 2008 financial crisis, a catastrophe that shook the global economy to its core. But gold? It rose, resilient and robust, a phoenix from the ashes. It stood as a testament to its enduring appeal and unshakable strength. Our final stop was the recent COVID-19 pandemic, a crisis unlike any other. Yet throughout the turbulence, gold remained steadfast. As economies faltered and markets trembled, gold offered a glimmer of hope, a fortress of stability in an unstable world. So, as we've seen, gold's performance during crises is undeniable. It has time and again proven its mettle, showcasing its resilience and strength. It stands as a bastion of security, a safe haven investment that thrives in the face of adversity. And that, dear friends, is the power of gold. A timeless asset, a steady rock amidst the shifting sands of time. It's a testament to its enduring allure that even today we turn to gold in times of uncertainty. When times get tough, gold gets going. It truly is the metal that shines brightest in the darkest times.